I've learned mindset from Justin a lot. That's for sure. Just hearing his story, not just from him, but other people. I've learned a lot about mindset from him. Jay knows what I'm talking about, but like there was a time during this year where, for me, it was just really rough. I wanted to leave just the industry. Just a lot of things were going on. And, I had a real conversation with Justin. And he basically told me, he was like, listen, shit happens in life, man. You can either overcome it or let it overcome you. And I just kind of had a real talk with myself after, like, things happen and you have to keep fighting. And after that, I mean, I started learning trading and my life hasn't been the same. I just hit Platinum 1000, very, 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 very close to Platinum 2000. And like I said, for basically every person on this call, it's about to be chairman season. Absolutely no denying that. So, Jay's, you know, uh, he's more than happy to give us his time. And guys, again, we wouldn't be on here. So if you guys have a notebook, notepad, take down notes, ask any questions you guys have because Jay's an absolute beast. And also he is kind enough to give us a discount for his course. It's like $600 on, but he's giving it to us for $300. And the only reason he's doing $300 is just because he wants to make sure that people are not going to be wasting his time because he has a lot of people to help. Obviously, he's like the master trader for IML, so he just doesn't want to make sure his time is being wasted. So $300 is absolutely nothing for a one-time payment. So definitely take notes, guys. And I might have to hop off of here shortly because I might have a three-way call. But take notes, and Justin, the floor is all yours.
Word. Thanks for that intro, Boots. Good to see you kind of stepping up and going, doing the things that you've always mentioned that you were going to do. You can hear me fine too, all right, right?
Yes, sir.
All right, awesome. So, guys, pretty much the biggest thing is, welcome to the call. Appreciate your guys' time. My name's Justin. I'm from a small town in New Jersey and everything. And, the biggest change for me in my life was around this time last year when I stepped away from like the whole marketing side of everything and network marketing and stuff after being successful in other companies and yes, enrolling Jason into our previous company and everything. But, the biggest thing for me was, when Jason explained to me what was going on here with Forex and everything combined, like I used to trade before with my boy Alex, but I wasn't on like a level I was now. I knew nothing about like Fibonacci support resistance. I was just like winging it. You know what I mean? So I knew what trading kind of was, but the biggest thing for me was last year was I was at a pivotal point in my life too, where, I just overcame depression in 2015 and, I was at the lowest point in my life. I was, driving BMWs and having, a lot of, income coming in. And then last year was really nothing until, I got another, job last year. The last couple months. In December, I cleared 15,000 in commissions. Last year, the, job I was doing vacation ownership. And that took me to like a next level as far as like a mindset thing. So, what I want you guys to realize is that yes, Forex can be very lucrative. You can definitely make a lot of money doing it. But the biggest thing from you guys to understand is you have to be smart about it. You can't just go in there and be like, oh, let me put 2 lots on this order because Justin calls it sell. Let me put 3 lots or $1 lot when I have a $200 account. Like you're going to blow accounts. You're going to blow probably 20 accounts if you're going to keep that mindset. So what you guys to realize is that's what I'm going to go over in this call is like how to properly risk and manage trades. And obviously, just a little bit of the basics. My course, yes, I go into a lot of details about like how I find, entries, how I'm finding different ratios. And my trading is very simple. It's a lot of ratio trading and, basically market structure trading. So what I'd like to start off with, and if you guys have notepads, you guys can get this going on, is I look at the monthly time frame. And the reason I do that is just because I'm looking on a bigger scale. The higher the time frame, the bigger the clearer the market's going to be as far as where it wants to go and what it's doing as far as how it's moving. So the monthly time frame, how I'm finding, let me just delete stuff here, remove these old drawing tools, is when I'm looking at structure alone. You guys got to train your eyes to see these different waves. See this wave up here, this wave down, this wave up here, this wave down. You see how that's moving? The market always has a clear order of what it's doing. So what I'm doing as far as finding support and resistance, and market structure. I'm looking for key levels where price is relevant now. And where is price right now? It's right around here, right? Price is right here. So why am I going to mark a chart up where price is all the way up here and all the way down here? Why am I going to do it all the way up here? I mean, we're on a monthly time frame, so there's not really much back info. All the way back in 1983 it was all the way up here. But when I'm looking at this, I'll take a horizontal line and I'll find like a key level, like right here. This was the lowest this was. I'll make it black. That's the lowest UJ has ever been right here, and it couldn't break that point. So I'd find it as a support level. So resistance is always the top, and support is always the bottom. I want you guys to remember that, because a lot of people say, oh, it's reaching support, and it'll be a resistance. So I'm like, well, guys, it's resistance, not support. So make sure you know the terminology. So resistance is the top, support's the bottom. So you can see this as a major support point here. Why? Because we're on the monthly and, it's the lowest it was. But where price is relevant now, you can see that there was a support level right here. Why I'm doing that, sometimes I go to my line chart just to clear it up a little bit. You can see that there's a median of, and I'll show you guys right here what I'm looking for. You can see over here, and those are probably wicks on, let me just look at the candlesticks. See how it wicks down into those levels almost? But the biggest thing is kind of like right here. Again, right here. Right here. And again over here. See all those points, how many points I'm looking for that? The biggest thing is which levels act as support and resistance. So on a monthly time frame, if we zoom in here, you can see it was resistance here, right? Because it was at the top. Resistance, you had a rejection off, right? Rejection off, and it broke it. And then it broke it. You see how this broke it? Whenever something gets broken, let's say you have a big level here. You have a level. If a rally breaks it, it's always going to retest that new floor or the new ceiling or floor, and then boom, shoot away. That's exactly what happens here. So which levels act as support and resistance? Well, we can see it acted as resistance here. It broke it and it acted as support, right? So that's a key monthly level. All right. So that's a valid level I'm looking for in a monthly time frame. So the next level up would be, I'll go to my line chart just to clear up some mess a little bit. Kind of around in here. Why? Look to the left, structure leaves clues. Here, acted as support, and here you're seeing it's acting as resistance a few times. And when you guys are doing a markup on a chart, yes, it can be quick. You see where it's kind of going to go, but you have to take your time and realize these things, because you have to get into the market's rhythm. Whatever pair you're trading, you have 30, 34 different pairs or something like that. There's always going to be a setup in the market if you know how to do this right. So if there's not a setup, let's say a UJ, there's not a setup, you don't need to get into all these different trades when there's 30 some different pairs. You get what I'm saying? That are going to be, you can always analyze this. So just be patient. But you can see this is acted as a support over here and over here, these two levels here on a monthly time frame, and then now it's acting as resistance, rejection off here. So those are my monthly key level monthly levels. And also what I'll do is I'll go here and you can do a text. And I'll just mark them off monthly and monthly levels, so I know. So like the weekly, like you see this, like see this consolidation on top of this, that's a buy all day. Why? Because it's indecision in the market. You had a rally up like this that broke all the structure inside of here, and it was a buy all day long. So you could have, just me by looking at it, you could have caught 2,400 pips in the weekly time frame. But anyway, weekly time frame, I'm doing the same thing. I'm looking for key levels. Where's the next key level at? There's one right here. But it's already broken. So now we get into the nitty gritty. Now that I have these two huge levels here, we kind of see it's kind of like ranging in between these, right? So a daily time frame. You can do this with any time frame structure as far as goes. I'm taking, I like some rays, but you can do vertical lines. You can see the structure point right here, right? Look at this, support. Couldn't break it. Breaks it, break a structure, and then it finally rallies down. What I'm looking for is points in the market where, look right here, support. 3 times it touches the support. Boom, comes back and tests it as resistance. That's a valid level, right? Valid level, comes back, tests, and then drops away. Where is this sitting off of? The huge rise that happened on UJ was for a reason. I can do that simply, showing you right now. So I always analyze every time frame. Boom, every time frame you had a huge rally up on the monthly, swing low to swing high, boom, retraces into a 50%, into a support level, and then shoots away, 50% retracement on the monthly. Daily time frame, you can see you have this point right here. It couldn't break it. Triple bottom on the daily and the weekly, right? The biggest thing I look for, patterns like this and structure. Everything's structure. It couldn't break these points right here. I'll do a lower point right down here.
5 or 6 turkeys that ran past my bedroom window. Did you hear them?
No.
Oh my god, that was so weird. They were
Can you mute your mic, John, please?
Yeah, there's like groups of like 10 of them at a time.
Can you mute your mic, John?
There's turkey like that before.
Oh, really?
No.
There we go. Sorry, John. You gotta mute yourself. So I got a buy on UJ when I was doing the auto trader right here. And the reason was because of this. My biggest structure that I'm looking for when I analyze the charts is on the daily and the 4-hour time frame. So when I'm seeing stuff like this, like you see this structure here, why? Because again, support here, resistance here, right? 4-hour time frame. Look at these levels that get broken, and I'm looking for, like, look down here. Not only is it buy, like, consolidating on this monthly level here. This isn't a monthly. Don't want to confuse you guys. This isn't a monthly either. That's our monthly level. It's a white one. It is a small one right here. Look at this rally that breaks structure here. So what I saw in the daily time frame was, okay, there's a break of structure to the left here a little bit. You see this double bottom here. I'm going to find a retracement. So what do? Swing low, the swing high. We can clearly see the previous support on the bottom over here falls into an 88.6 retracement. Now you see this candle right here. If I get a retest on any time frame, on a 4 hour or 1 hour, I'm in. Look at this consolidation here. Little rise up, little down here, little small double bottom on the 4 hour. 1 hour, I don't know if it'll let me go back that far. Let's see. Yes. Look at this. Down, retest. Off an 88.6 on the daily level for a swing trade up. So the higher the time frame, the less noise there is on the chart. And that's why I really don't like to go down to an hour. I like the daily and the 4 hour because there's just less noise. Like the structure is better on a higher time frame than anything. So seeing this, what you have here is a valid ABCD. You have your impulse drive up, breaking the 4 hour structure, A to B, and this is stuff I'll go over in my course, so I'm not going to go too in depth with it. 88.6, boom, and it rises, you know, A, B, C to D. So if you got in on this trade and manage it along the way, and if I held this on my auto, my entry was 10, where was this? 88.6, 100, it was like 101. So it was literally 7 pips from the 88.6. You would be up, owning this long term, it's been about 5-6 weeks, 1,600 pips on UJ with no drawdown. So you can see kind of how structure plays a key part. Now, another thing I'm just going to analyze real quick. I'm on a 4 hour time, or let's do an hour time frame. Let's say we want to do some day trading, right? Just find something real quick. I'm just going to mark off some key levels. All right. So you see this rally that broke structure here? Down. And see this structure to the left? Are you guys seeing how I'm getting this point right here? See this wicks right here? See this consolidation here? All I need to do, it comes right in between the 78.6 and 61.8 to retest the previous floor for, you know, not a big move, but this one was obviously 114 pips. Could have called easily just off structure alone. So when we're finding levels, I'll go to a different chart. Euro USD is a good one. I just did this one with my students, getting in depth with some stuff. Structure, structure, structure. Look to the left, leads clues. 4 hour time frame. I'm looking for key levels. Horizontal line. So let's start with a daily. I'll take you through my whole process. Daily. All right. So daily, there's obviously some structure right here, right? Look at the support that it has. Support, support. Look to the left, market leaves clues. Again, right here. Boom, right here, right around here. Again, it's just been consolidating that. Up top here, resistance point. Right here, this mess up here, breaks it, comes down, retests here, retests here, retests here, acts as resistance, and then shoots down away. So the move I called on Euro USD last week, 150 pips. You always have to be looking at the bigger moves. So you had a rally down from this wick to this wick down, right? So you see this structure point right here. Thicken it up a little bit. Falls into in between a 38 and a 50%, right? So now what I'm trying to look for on a lower time frame and 4 hour is look at this, and it's on the fibs. Structure right here. And I'll do a different color code just so I know, like a 4 hour, you can do whatever colors you want, but we'll do like a blue. Look at this, support, resistance, resistance, boom, and it finally breaks, right? 1 hour time frame. Breaks. Do this all day long. Breaks. Small little retest. Retest the new floor, and then goes away. Bigger move plays. So you have all this of support here. I'm just finding a retracement for a buy into a higher time frame stall zone. All you have to do is take your fibs out. Right on 23. When you have a big move like this, like see this is 12-hour rise on Euro USD. When you have a big rally like that, sometimes it won't go into the 38.2, but you can see how the 38.2 matches with that previous resistance level for a perfect retest. But here, 24 to 38.2% is usually what happens after a huge rally. Sometimes it will retrace up to 23 because buyers are in control. So seeing this actually, I think I drew this in a 1 hour. It did come into a 38.2. Yeah. I actually take it from this wick here. The reason is because that's the rally that broke the structure. So it does fall into a 38.2 here. Boom, for a buy up, 150 pips. You also had a pattern form, was a pennant. See all this up here. Bullish pennant for a breakout upside. If you guys remember from last week. But the major thing I want you guys to realize is, okay, I saw this structure being broke here. Where's my entry at? You know, you don't want to get right at like, you know what I mean? You don't want to get in right here. You want to wait for that pullback for, you know, confirmation. If we were to look at here too, see this previous resistance level here? For entry, we'll just focus on this part right here. What I can look for is for some engulfings. Look at this consolidation that's just happening on this level. Consolidation, consolidation, consolidation. This was about 2-3 hours. And it finally goes away. Right? All these retests, see these retests on this structure? I would have entered for a sell, and I would have put my stops above. 10 pips above the previous high. For a nice risk-reward ratio trade, you can obviously see all the way down to here it reaches. For a trade of 180 pips on Euro USD. So when I'm looking at this 15-hour time frame, I see this, you know, consolidation on top of the structure line. Now it's about risk to reward. What is my position size? Where is my target set? Where is, you know, my entry? And where could this go to? So if you see here, short position. If I entered off of this consolidation on this resistance point, my targets were, let's say, you know, down in here. My stops were set above here. You have to analyze and figure out your risk before entering any trade. You just have to. You can't just, all right, well, I'm going to get in the trade now and just wing it. When you wing it, you lose. I want you guys to remember that. You wing it, you lose. It doesn't matter if you had a good streak, you won 10 trades in a row on a $1 lot and you made $1,000 in a week. All right, cool. Guess what's going to happen in 2-3 weeks? When you wing it, the market's going to do whatever it wants, and you're going to not know where the market's going. You're not going to have the proper risk. You're not going to know where your stops are. You probably might not have even set a stop, and you're going to blow your whole account. Trust me. Beginner mistakes. I want you guys to learn from my mistakes when I first started. Don't do it. So when we're looking at a trade like this, figure out your risk to reward. All right, so my risk is literally 10 pips above this high. Even if this goes here, now look at the risk to reward. It's close to what? 6, like we'll say 4 to 1. So 4 to 1. All right, so how much of my account size am I willing to risk? So I have $1,000 account, right? I'm willing to risk 2%. What's 2% of $1,000 account? $20, right? So $20. If my stops are set 10 pips above the high, what can my lot size be? Well, 0.2 is $2 per pip, right? A 0.1 is $1 per pip. 0.2 is $2 per pip. So I can literally put a 0.2 position and lose 2% of my account size comfortably. I can literally, and this is how I'm so, have 97% of my executions are. Yeah, sorry about that, guys. Wi-Fi cut out real quick.
There we go.
So, again, literally, like, this is how I become 97%. All my execution has been 97% on. I rarely, I don't say that, I say that humbly because I want you guys to learn from my mistakes. So when you set a trade like this and you analyze it and you know your risk to reward, you don't want to be like, we trade to not be on our phones all day. Like, I'm just going to be real. Like, we trade to have a life. When you're like, and this used to be me, like I always be consistently on my phone. Like, I guess that's how I got so good. I don't know, but consistently be looking at charts all day long. I'd be up all night, London session, this and that. You don't need to be on your phone all day. You just don't. When you have something like this, all right, I figured out my risk. And the reason I would be on my phone all day is because I would just wing it. I put a big position on and I'd see it retrace a little bit, not knowing where it's going to go, and be like, oh my God, I don't want to lose. Whereas if you set your risk right, okay, this is my account size. This is how much I'm willing to lose. I'm willing to lose 2% on this trade because why? This can actually, this could have a target of, let's just see right here. I'm gonna analyze this real quick. If I'm looking on an hour time frame, you have this rally up. Okay, so this is a big structure point in here, 4 hour time frame. Entries right here. All right, so it's literally in this range right here, forming higher highs. All right, so I'm going to take this previous swing low to this where it is now, and I'm going to take profits at the 38.2, which is right around where this position is right here. All right, so back to the 1 hour. So now I'm risking 10 pips, and my first target is 50 pips. So I'm willing to lose on a 0.2 lot size on one position. Now it's one position. If you want to open two positions, now you got to do what? 2.1s, right? To equal that 2%, the proper risk, plus your commission, whatever. So I'm willing to risk $20 to make 100 all day long, right? Biggest thing about this is you set it and forget it. All right, so if I don't need to look at my phone to, oh my God, how much am I down? If the trade gets gone, I lost $20. Oh, well, I'll get into the next setup. Why? Because it's 35 different pairs, and there's always going to be another setup during the week, during the day, during the hour, whatever. So then it becomes a matter of managing the trade. A lot of people on, GPB, JPY last night and in the group, starting to go down now, a huge rally down now. But there's two entry points, 146 and 146.3, which I'll show in a little bit. And then, we'll end the call. But here it's all about managing. What I mean by that is when this rallied down 20 pips, I'm automatically taking profits or cutting half of my position out at 20 pips. Why? Because if I have a 0.2 running, let's just say I open one position, I have a 0.2 running. I'm 20 pips in profit. How much is that? $2 per pip. That's what, $40, right? $40. All right. I'm at $40 in profit. I can take 0.1 and I can get 20 of that in my account profit right now. Right? I don't know why it's still showing up. There we go. Now, and then I'll have 0.1 still riding, right? So now on that other 0.1 that's riding, I'm moving my stops to entry for a risk-free trade. So I automatically won $20 on this trade, 20 pips in profit. I won $20 and I still have point riding, and now I'm managing the trade. So no matter what, if this retraces up and my stops are set to break even, this is a profiting trade and I'm not losing. Why? Because if this does pull back in and rises up here, that's automatically going to close your stop loss at break even. So you're $20 in profit, so forth and so on. Then it becomes a factor of managing the trade. So, all right, this rally's down 50 pips, So now you have your 0.1. Is that what, $50 right now? It's at $50 right now. You don't need to take half. If you want to take a 0.05, that's another $25 profit, right? Let's say we take a half of that position, 25. So now you have 20 plus 25. How much are you in profit? You have $45 in your account off of this trade. Now you have 0.05 still running at 50 pips is another 25 that you can take or let it keep riding, right? At 50 pips. And then look what happens. Market pulls back a little bit, pulls back a little bit, and then boom, shoots down away, right? This 0.05, I may have moved it down, or I probably would have kept it, at break even because I already made $45 on the trade, and I just have seen it too many times where this can, pull back a little bit into that level and then finally have a big drop. And look what happens. Boom. So you had 0.5 riding. If you let this ride, your stops at break even. Now you have $45 in profit in your account. You made $45 off the trade. All right. 0.05 running just in case. And look what happens from entry. Boom. 178 pips. So at 50 cents per pip times 170 is around $90. So let's take a look at this. You're automatically in profit. You're in risk-free trade. You can focus on the next setup, whatever. Now your 0.05 at 178 pips is around $90. So 90 plus 45 is $135 I made on this trade. Risk-free, didn't need to worry about it. Didn't need to look on my phone all day long. I had calculated my risk from the beginning, set my stops were tight above this high, off of this key structure level here, right? That's what it's all about. That's what Forex trading is all about. Literally set and forget. So that's what I want to reiterate with you guys here. I'll go to GJ. So this is and I did this with my students too. So this is our entry called 146 right here. And look what happened. It fell 50 pips. So I recommended a 0.02 per $1,000 account. 60 pip risk on this one. It's a big risk, it's a swing trade, possible down. At 20 cents per pip, you really only risk $12. So you risk 1% of your account size if this hits the stop loss that was, way above these highs. But seeing this, your take profit one was 50 pips. I see people complaining in the group, you should have taken profits at 20 pips, right? 20 pips would have been, at 0.1, $2. And then you're managing the trade. Your stops are set to break even, right? Break even with your take profit 145.5. You could have taken all your profits at 145.5 before this goes up. And even if you were holding, when this rally did happen up, your stops are set to break even. So now you automatically won on the trade. It went down. This is another little push up. Now this will probably go down here. You see this huge sell movement here. It's almost 11 o'clock, in the 10 o'clock hour in the New York session tends to reverse. So you see this huge engulfing pattern that's forming here. If this prints in the next 10 minutes, we can expect GJ to see new lows. That's just me. But what I want to reiterate to you guys is one thing, know where your structures are. When you're getting into a setup, please just calculate your risk. Know like where the previous resistance instructors are. Know your risk to reward ratio, and then just set and forget. You know what I mean? That's what it's all about. So with that being said, I'm going to open up the floor to any questions for you guys, and then we'll go from there, and then we'll get off this and get some trades going.
Hey, Justin, thanks for doing this, man. It's amazing shit. Question I have is about moving stops to break even. When do you actually do that? Like up a certain amount, or
So about
like
20
30 bips,
about
20 bips?
20 it depends on the pair. Like a pair like a Euro USD or AUD USD that moves kind of slow, I'll do it like 20 or 30 pips. A pair like GJ, I might just wait on it. You know what I mean? Because it moves quick, but still 30 pips is still probably a nice, I always cut half of my position at 20, 30 pips. Always.
Okay.
Or if I'm twin trading, it's the same. What I mean by half positions, it's the same as twin trading. But now with the risk to reward, you have to be important. You have to know your risk. So let's say when I like on a swipe trade, when I recommend a 0.02 per $1,000 account, it's not 2.02s, it's 1.02. So if you want a twin trade, you got to do 0.2.01. So you get what I'm saying? And if you want to take profits, one position, 20, 30 pips, you can do that. Or cut half your positions, 20, 30 pips, you can do that too. So that's why I had my take profit one on GJ set to 145.5 just because it's quick in and out, 50 pips in and out. I can take my profit 50 pips because you see here is my old chart. You had a cipher formed here and it rose up here. Daily time frame. What I saw was here, and I do a lot of ratio trading, which I go over. You see it's reaching a 61.8 level, which is what I said in swipe trades, and you have a key structure level around the same area, this zone up here. That's why I called it sell. So this could potentially go down, with your points, D points, right, like even down to here, to this structure level here. So you're looking at a possible, 61. See how it retests 61 exactly now and started dropping, be a nice 800 pip trade over the next couple of weeks. You never know. That's why I set, take profit 1 to 50 pips. We're in and out for swipe trades. So it's all about managing and, managing the trade. But to answer your question, a good 20, 30 pips is a good set break even point.
All right, cool. Thanks, man. And also, when do you know that, like, do you always, if the trade is going to go against you, do you just let yourself get stopped out, or do you take a smaller loss when you know it might go against you? If it hasn't gone your way in, like, let's say, like an hour and a half or something, it still hasn't gone your way.
I get it stopped. I let it stop out because you never know what the market's going to do. I calculated my risk. I've calculated how much I'm willing to lose per account size. I let it lose. If I on this trade, I had a 0.01. If I lose $20, I lose $20. I'll find another setup and get it back. You know what I mean? How am I going to let this go? Back. Like let's say, for instance, I'm trying to see. Can't find anything right now that would be kind of, but like, when a risk is calculated, I'll just let it hit it.
Basically, you're saying never increase your stop loss. Just if you get stopped out, you get stopped out.
Yeah, I've done it too many times before in the past, and it would just be, you end up losing 4 times as much as you would have if you just let it hit the stops and then getting back in. Why am I going to lose 4 times as much in the trade when I can find the entry point and I can reanalyze it, figure out an entry point for a target to get back in? What if it's going down to another fib level that's 100 pips deep? You never know. I can take my stops, whatever the risk is calculated, and then let it wait till it hits those levels to get back in again.
A very good point.
Because it's just a mindset thing. Like when you're that much in drawdown, then you're stuck on your phone all day. You're like, oh my god, and your whole day's ruined because you don't want to be down that negative, and you're stressing.
Very true.
Be stress free as possible.
Yeah, that makes sense. And then I guess you just draw your sport in your zones once you actually figure out what your zones off your sport and resistance after you figure that out, and you do it from your monthly to weekly and daily and 4 hour.
Yeah, that's my main ones. And I'll look at the hour for like an entry if I see like an engulfing pattern or something like that. But pretty much, I'm just finding those key levels. I don't, a lot of people like, I don't know how they do it, but like, and this used to be me, like they'll have so many different color coded lines and there'll be like this many lines in the chart. I'm just like, how do you know like what it like, it'll be different color coding, but it's too confusing.
Yeah, that's too much.
Look to the left, the market leaves clues. So what I mean by that is like, look to the left, market leaves clues. All right, if I'm looking at a blank chart, I don't have all these indicators in my chart. All right, so look at this point right here. All right, so that's a point here. Why? Because they are here. Look to the left. All right, that's it. Where price is relevant now. You can see that there's a big resistance point where your USC is right now. Boom. See this? Like how many times this is tested on a 1 hour. If I look to the back, it's again right here. So seeing this, like see this huge rally down here. Seeing this, that's right into a 38.2 retracement. You know what I'm saying? On a 1 hour. So this had a huge rally down, boom, into a 38.2 on a resistance line. So we can, if we were to see this trade, right, this could go down and break this low right here based on ABCD pattern confluence. 200 EMAs still showing a sell side in a downtrending market. So if we were to take this, now watch this. Short position, where our stop's going to be, 10 pips above this high. Boom. We could have possible reward, even down to back to test that previous support. Look at this. Oops, my bad. Change this real quick. I'll do that again. Entry is price is right here. Stops would be right here. And then look at that risk to reward. So now this is a 30 pip stop loss. So 30 pips, what's my account size? How much am I willing to lose? All right, so I'm willing to lose $30 on this trade. All right, so I can put a 0.1 on this and have my target set and manage to trade along the way and then set my stop loss to this, 30 pips. You know what I'm saying?
Okay. Sorry, God.
Go ahead.
I was just gonna say, how do you like figure out your entry and your direction? For a trigger that you use, or is it just a support resistance?
What do you mean?
Like, you see how EU is up there testing that blue line that you drew?
Yeah.
As your resistance line. Now, how do you know if it's gonna actually break it or if it's gonna reverse back down? You know what I mean?
We don't know. All we can do is calculate risk and do that. But how I know that is because look at this. You see this candle close? I'm on a 4 hour. This is what I look at 4 hour and daily first. You see how this candle closed below these lows right here?
Okay, yeah.
Look at the structure that was broken. This blue line. Look at this rally that broke it. Sellers are in control, right? So all this means is that the sellers are in control and that they're closing their positions, right? They're closing their positions before they get back into the market. So now that's why we use fibs. 38.2, look how the 38.2 comes almost back into this structure level here. A lower time frame, you see this consolidation here. Look at this consolidation, rallies down, boom, and now comes back up, retests. You have it fighting this level right here. All I see is look at this risk to reward. All right, I'm risking 30 pips for 115 pips, at least. You know what I mean? If this was, and I teach this in my, mastery. If this was an ABCD down, your ABCD is in huge downtrend. So this could potentially go to, my 127 extension. Which would be below to zero. What I'm saying?
don't know how I didn't see this before.
Hold on, let me go back. I'll actually put that trade in.
The Euro USD.
And if we lose, we lose. That's just how I feel. I mean, you have a doji reversal here. I don't really like dojis, but I mean, you know, sometimes they're valid, sometimes they're not. But based on structure-wise, I mean, look at this triple top on a 1 hour. Triple top, now quadruple top. Like, you know what I mean?
Mm-hmm.
Anything can happen. This could go, you know, you got to analyze both ways. But this could go up into this structure level first. So see how that 27 falls in line with the previous structure here?
Mm-hmm.
It could actually go there and then down. So if you want to calculate risk now, you can have two entries, entry now and entry wait for that line. But then again, you have to calculate your risk. Where my stops are going to be 10 pips above that high. So my stops are 88, 78 like here, right? And then now I'm here. So if I get in now, how much drawdown is that? And if I enter again here with a 10 pip drawdown, so how you got to do that is, and I like using JPY pairs because they're easy to calculate. I'm just going to, like, let's say 146.0, right? Like last night. And then I had a second entry, 146.3. The median of that is 146.15. If my stops are 146.750, what is that? That's 60 pips between both entries if I enter two times. So I'm risking 60 pips. So what's my account size? How much am I willing to lose? And that's how you figure out your lot sizes for each one. So with this, I'd honestly like a possible sell now because it's sitting on this structure level here, but it can always go to this level here. I don't see it going past this level here. And if it does, well, we calculated our risk, how much we're going to lose, and we're not blowing accounts on, you know, these big lots and everything.
Okay, that makes sense. Interesting.
You know what I'm saying?
Yeah, no, I hear exactly what you're saying. Thank you.
You're welcome. I only say it may go back into that level because what's on a 38, almost a 38.2 right now, but the previous rally up retraced off of 38, but it still is consolidating here. So this could go up to the 27, which is right around this 50. This is all ratio trading. I'm not going to go into it because it's all secrets and tricks I do in my course and everything. But, you know, could see it go down here.
When you draw your fibs, what do you look for to draw your fibs? Like, I know you're supposed to do it before, like the prior swing, you know, swing low, swing high. But
That's it. I look for rallies. Breaks of structure.
things.
Breaks of structure. I usually like the 4 hour. Sometimes I do on the hour. Depends.
Okay. You don't draw your fibs on lower time frames, just do the hour.
I do sometimes, yeah. But like the NCD, I guess the chart I had for this is actually the swing trade I called, I think. Swipe trade. Yeah.
Yeah, I think I remember that.
I had this drawn like last week, I think. Save 30 pip risk. I figured out my risk, where it could go, and my reward. Look what happened. Valid. Do I have another NCD USD chart? But you see here in the 4 hour how I find the structure like it broke this here. It's not rallied up, and then I find that retracement point off the 78.6, and then boom, straight away.
Uh-huh.
On the hour time frame, on the lower picture, there was a harmonic, and I sent that on the swipe trade. Boom, down in, retraces off the 61.8, retraces off the 50%, down into, well, I had the 70.6, but it went to the 88.6 still for a valid Gartley. But look, I had stop set on the swipes, I think right below the 88.6. So if we held this trade, now we're in, I calculated risk to reward. The risk was actually lower than that. It was like down here. My target set to here, to this previous resistance point here. So you can see price rose off entry, which was off the 78.6. It was a 100 pip trade. You know what I mean?
Yeah. I need to
see how this broke this here, and it retested, and shot up again. It's all structure. And now look where it's falling into. It's falling into a 61.8 daily, because I drew it from this swing high, the swing low, daily. See that break the structure down, pull back into 61.8 and previous structure here. You see that? For another downward leg.
Okay, yeah, I see that.
So
Can you teach all this in your course?
yes. Hunter knows.
Very cool.
Word. Do we have any other questions?
What other things do you use for confirmations?
That's pretty much it. Zone, support, fibs.
Other indicators or anything?
Not really. Not anymore. Sometimes I use an RSI. If it's like oversold or undersold, that's pretty much it.
Okay.
Are you at a coffee shop?
Yeah.
Did you get any coffee yet?
Right here, bro.
Awesome. Just making sure. I'm about to go get mine.
I got something called like Zombie Cure or something. It's like heavily caffeinated with a hint of coconut.
Zombie Cure. They should market that in The
Abu,
Walking Dead.
I'm at Ventnor Coffee in Ventnor. You know what that is?
No, but we should start doing home events there.
Dude, it's pretty sweet. They got a stage and everything.
Yeah, that looks pretty epic.
I don't know if we can do home events here, but
No.
words. Anybody else have any questions?
I'm good right now. How do we get started with your mastery course?
Just contact me and message me, and we'll get that going. Word.
Thanks for doing this.
You're welcome. No problem.
I learn something new every time you do a video like this.
Hunter's been in for what, a couple months now?
Yeah, I've been in for a little while. Abu got me to meet you, and then I fucking loved it ever since. I've been going to Barnes & Noble like every day, reading Forex books, rewatching your videos, drinking coffee. Like, it's definitely worth it. I probably spent all my Forex money on coffee to be able to study Forex better, but it's definitely working.